What's up, guys? Ron from Rohde Law, and today we're really excited to have Perry Zheng with us. He is a real estate entrepreneur.
Two of them of the four have gone full cycle. So the first one is 94% return after all fees. The second one is 38% return after all fees. The 38% is between 2021 and 2023. So we felt actually very proud of that. We even achieved some return. When you are GP, you are managing, hundreds of millions or tens of millions. You are managing hundreds of investor sensitive information.
How do you create software to manage this?
Otherwise, you're saving their bank accounts on your spreadsheet.
He's got a great story coming from the technology and engineering background. He's owned real estate assets as a syndicator. Perry, thanks for joining. I've known you for a while through SARE. For people that don't know, it's Subtle Asian Real Estate. It's an incredible Facebook group. Why do you think SARE is so popular?
I think they are very genuine and intrinsically good people. What people also see is that they never charge anything for their community, right? And I kind of know a little bit about the back end. I like, why do you not charge? Or that question has come up multiple times, and they made a conscious effort to say not charge. And I really, really respect that. And that's just one manifestation of their DNA. And that kind of, I think people are drawn to that like authenticity.
Yeah, it's kind of the opposite of everything you see on TikTok and Instagram that says build a following, create value, and then monetize. I think how you unlock 1 to 2x growth versus 10x versus 100x. It's when do you wait to, I don't say monetize, but when do you wait to do those things? If you just keep providing value, you can snowball into something huge, because now it's turned into a great, it's an incredible platform. So we'll drop a link for the Facebook group. I think it's not limited to Asians anymore. There are a lot of regular people or mixed people like myself. I can claim both. I have my dad's white side and my mom's Chinese side. Tell us a little bit more about your background, because you're in California. Did you do the kind of like stereotypical good kid, good grades, go to school, get a job, and make your parents happy?
Yeah, so I am an immigrant. Came here when I was 11 years old with my parents. They own a humble Chinese restaurant. Did well in school. Afterwards, I started working as a software engineer. That was the beginning of my career. And I'm forever grateful that I got to know about computer science in college. And so I worked as a software engineer for a few years. Bought my first condo in the Bay Area. And that's when I learned, hey, I have a 3-bedroom condo in San Francisco. That's the result of saving some money and so on. And I could live in one room and rent out the other 2. And that's escalated to like house hacking. And that's when I started reading books and listening to podcasts. Came back to Seattle. Every year I bought 1 single family. So 7 single families later, I maxed out my debt to income ratio. Then I started exploring syndication. Did about 4 syndications, and then now no longer doing syndications, but focus on the software that powers the syndications behind the scenes. So we have 4 syndications. First one is 172 units, $4.3 million raise. Second one's like a 408 unit. Third one's 236 unit. And then the last one's at 208 units. So raised about $20 million, more than $25 million to date. 2 of them of the 4 have gone full cycle. So the first one is 94% return after all fees. And then the second one is 38% return after all fees. The 38% is between 2021 and 2023. So we felt actually very proud of that. We even achieved some return in those 2 years.
Yeah, absolutely. To exit when a time when people are giving the keys back, a GP that said debt is $200K a unit, but the value is only $160 per unit. And I think that's the real problem with syndicators is they don't have deep pockets. And so if the LPs don't agree to cash calls, and you've come back to your first love. So tell me about the project that you're working on now.
It goes back to my first deal. It was 172 unit. It was my very first syndication. So the experience up to that point is I was a good software engineer. I was a staff engineer, then became an engineer manager at Lyft. And when I joined Lyft, it was 300 people. When I left, it was 3,000. being the kid that does, house hacking, even though I was a staff engineer. So I lived with like 4 housemates. And so because I'm super frugal, trying to really passionate about real estate, gave a talk at Live to about 300 people about the benefits of real estate investing. And so trying to scale my real estate, because I basically maxed out my debt to income ratio. The very first deal is a 172 unit apartment complex, raised about $4.3 million. That's 70 investors, about 50-60K each. Okay. And I was not using any software. So I was using spreadsheet and DocuSign. So that's 70 DocuSigns I end up preparing myself. That's 70 emails that I end up asking, what is your bank account number? That's 70 line items on my Google spreadsheet, keeping track of everyone's sensitive information. And so I thought to myself, there's gotta be a better way. There was a better way. But I realized 2 things. The first thing I realized is this whole idea of File 6B and File 6C, these security entity or security methodologies, were only like since 2015. The law was passed in 2013 as the Jobs Act, but it was not enacted and made mainstream until 2015. And nobody really knew about them until 2020s. Or 2019s, 2018s. And so that's good. That means I'm in the early of the curve. And then the second thing is all the vendors at the time were charging like basically $12,000 per year for up to 5 deals. So if you have 1 deal, too bad, you're still paying the $12,000. And so, that was my first deal, and I didn't want to pay that much. So I just did it hand by hand. And then later on, we start using other portals and so on. And I thought, no, I want to build something like this. It's not that hard to build. That naivete ended up being the beginning of this company. So we start taking matters into our own hands. We start writing our first line of code in early 2020 with the assumptions that how hard can it be? It turned out to be very hard, but that's a different story. So to give a sense of like what the company is at right now, we are backed by Y Combinator. Because when I quit my job and we raised money a year and a half later. And so for a year and a half, because I didn't know how big the market was, I was part-time on it. Hire about 7 engineers, use just only my money. Then I quit my job and applied to YC, got in. We raised about $8 million. We have 700 GPs on the platform. Right now, we're managing about $4 billion of equity, and so $10 billion of assets or more.
Yeah, what do you do with all that data?
So far, we are actually not using any of the data. Cashflow Portal, Cashflow is the brand. Portal is the feature. And we just recently announced we have Cashflow Underwriting, which allows people to upload a rent roll and a T12 and automatically parse the data. And so, right now it's only for multifamily, but
yeah, I was going to say that. So
commercial and industrial, mobile home, and hotels and so on. So the world is an oyster in terms of what you can do to bring technology into that. So we try to be a all-in-one solution for real estate investing. So cash flow underwriting, cash flow CRM, cash flow portal, and cash flow banking. Right. And then there is also a cash flow marketplace, which is a separate website.
Okay, so you even have like APIs to tie into the GP or operating bank accounts so that you can make distributions or make the account visible from that dashboard?
That's correct. Yes.
Okay.
So in terms of cash flow portal, let's talk about kind of what's the value, I guess, like why do GPs need a portal in the first place? And this is like coming from my personal experience, is that when you are GP, you are managing, hundreds of millions or tens of millions, that you are managing hundreds of investor sensitive information. You need to have a waterfall on what numbers to give them and how do you distribute this amount. Otherwise, you're saving their bank accounts on your spreadsheet. Right? Don't do that. And the waterfall is not tricky. There's class A, B, C, D, and there's an 8% pref, and then there's like whatever split, and then it's a 50-50 split after they hit a certain IRR hurdle. So that information is captured by the software along with their sensitive information. So yeah, to answer that question about the distribution, on Cashflow Portal, you can connect with the bank. and then you can make distributions directly through Cashier Portal.
Wow,
And
see,
they're not
that seems very useful to kind of have it in one place where you put your hat on and say, okay, if I'm a GP, these are the things I need to do. Send emails and schedule Zoom calls through the CRM and get new money. And then this is how I look at my existing assets and what their cash balance is. And then here's my existing investors and how do I flow that money over to them. Those are kind of the three main stages of a GP is pre-raise, operations, and distribute cash.
That's right. That's it. So if you zoom out a little bit, is when I raise money for Cashier Portal as part of the angel investment, a lot of people were still say that like, how big is the market, right? This seems something super new. This is the first time you heard of syndication, and then I will say, I don't know how big the syndication will go. I don't know how big the alternative investment space will go, right? I don't know, but I just found that very interesting, and maybe let the future be the decider on like how big the market could be, because
I think that's a great chance. I'll bring up your opinion. There has been legislation and some proposals about reducing or eliminating this accredited investor status. Basically, for people that don't know, there's been laws proposed about this in the past, but basically the premise is wealthy people have an advantage in that they have access to these types of private investor deals. You as an LP, you don't need any time, you don't need any true expertise or experience, but it's allowing you to get these 94%, 38% returns, which are great. And those would be very useful for still middle class people that could take advantage of this and invest. So they say these government barriers are really they exacerbate wealth inequality because the lower people or middle or lower people don't have access. So we should get rid of this. And if you are sophisticated and maybe if you pass a test, or if I don't know what time value of money is or discounted cash flow, if you can answer those questions, you should maybe be able to invest with Perry, regardless of your income, which is highly skewed, right? People in California with a high cost of living have a high income, but they may not have as much savings as somebody in Texas or the Midwest that doesn't make that much. They make 180,000, but they have way more liquid savings than the engineer who has to house hack with 4 guys, So the rules are kind of they're kind of silly in the sense that they're a static rule that doesn't apply to 2 people in different situations. And so there's this argument it tends to be from more democratic proposals, like getting rid of these rules. Let's let everybody invest. I mean, what's your take on that? Do you think there should be some tests? Is it the government's role to limit the downfall? Is it to protect people from losing their shirts on investing on these deals?
Yeah. I personally believe that there is a concept of should the rules be classified. I view it more as a lens. Does it make the old money better, or does it make the new money better? And I think if you introduce tests, it makes the new money better because it gives them the entry point into this, right? I just happen to be a staff engineer at Lyft that went through IPO, and overnight all my coworkers and me become multimillionaires. That was not supposed to happen. I just happened. And I'm quote unquote made the best out of it by investing more into syndications and find a way. But a lot of my investors now are from Meta and Google and so on, and they might be fresh out of college, and they technically they are all accredited because like just 2 or 3 years after college, right?
Yeah.
And so I am a proponent of the test rule because I think that I actually expand the pie. That's my opinion.
I think a test that is, it's free to take, it's online. The questions are not complicated, but it could have, could you cheat on it? Yes. But it would be simple enough that if you just answer those questions, that's a better test than this arbitrary income or net worth test that I don't think indicates your tolerance for risk or your appreciation of the risk going in. And I agree. I think it would be a bigger pool and a better pool of investors too, because
I agree with
you
that.
don't get that friction, and you would probably get more capital allocated to better sponsors when the profile of the investors shifts a little bit based on income versus passing a test. I don't know if the test is useful, but it does, at least introduce people to the vocabulary and show them.
I have a very optimistic view of the future in all sense of the word. I do think in general, government is weekly consistent system that does try to do the right thing in the long run. And so it is moving in the direction that is trying to popularize the alternative asset industry. Because what it could have done is it could have not introduced the test rule and make the income and the net worth requirement even stronger. They could have done.
Just
They did not
adjusted
do
it for
that.
inflation, right? If they had just gone with CPI, that's the thing.
That's right.
Those numbers have stayed static for years.
That's right. That's right.
And even if you just did a 2%, that number could vary and adjust every year.
So, if you look at it from just like a few steps, I like to look at it from a decade instead of like what's happening right now, like last Monday, right? And so, because that's what they passed the law last Monday or this Monday. It is government is active saying we are incentivizing passive investments. And
I agree with that.
Our rails are placed, but we are incentivizing that behavior. And so that's good.
Well, then, so here's my optimist view for you and your industry too, because if we do take a look at 10-year chunks, 10 years ago, if you would have sat me down and said, Ron, institutions are going to get into single family rentals and they're going to be buying a bunch of them, I would say you're insane. No. The individual nuances of every single product being different. You have a different dishwasher here. You have a different water heater here. How do you afford to send a handyman? I can do it because I know a guy that'll go for $100. How does BlackRock have a guy who doesn't pick up the phone for less than $500 efficiently drive out, 30 minutes to the suburbs, 45 minutes to the store, 20 minutes back? Single family was just such a disparate asset class 10 years ago. If you would have told me that they would be plowing into this, I would have said you're bonkers. I would have taken that bet. I think the difference was that institutions still had my thesis, but what they did was they forced the product to change, and then they created build for rent. And they said, you're right, Ron, this is a problem. Let's commission 42 houses that are all identical warranties, identical washing machines. They can make an SOP for their handyman that says, we don't even need to hire a appliance repair. We train him on how to service our product. And they said, that's how we standardize it. And now, Invitation Homes, 86,000 houses. These portfolios are massive. And so I would probably agree with you that anywhere that there is yield in real estate, we will see more syndication as people bid up to try to, I won't say democratize, I don't really like that, but they will try to buy the yield and do distributed cash raising, because real estate's expensive. It's a cash intensive business. And so if there's yield out there, people will find ways to raise the capital. Using your platform can definitely help. And then I do think there will be more syndications in the next 10 years than decreased.
Yep, that's right. Yes. Well said.
Are you looking into like self-storage? I mean, I know that's a big syndication asset class as well.
We within our portal, and one of your first questions is like, what kind of data have we done? The answer is we haven't done much. We share, but we haven't done much. But we have seen people do all kinds of interesting things. One example is they do use it for build to rent. So I'm very familiar with that asset type now. I have seen mobile home parks. I have seen logistics companies. I have seen people raising money for Starbucks franchise, McDonald's franchise. I have seen startups. I have seen like trucking companies, ATM machines, notes, debt notes.
That are on your platform. They're people raising money for that investment.
Yeah. So it definitely opened me to the very wide world. That's like, wow, that's how money gets around. And I think it's a good thing. And so what though is I like to think about what's the common denominator. And we face a lot of this challenge when we try to create our sister company, which is a marketplace that called Palace, Pallas, like Dallas with a P. It's a Athena Epitaph Palace, and $1.5 million now have been raised on that marketplace. But the biggest problem is if I'm like a software engineer that works at Microsoft, I go on this website. What is it that makes me trust that I should invest 50,000 with anyone, right? And so as alternative investments becomes the trend, it's not so much of a problem with the stock market because they have to report quarterly reports and so on, and they have the army of financial accountants and auditors to do so. But so like, who's going to provide that kind of infrastructure and compliance, and like, how can technology help making that process easier? Because people are not reporting it or their like previous, track record, because it's not easy to do that, right? The same way that Airbnb photos are not that good because the hosts did not have all the tools to upload. So what Airbnb does is that we're gonna help you take the photos, and so there are two. There's a very interesting analogy here, which is at the end of the day, everyone is serving the LPs. Period. I like to think LPs are actually at the very top. They are what they are serving. GPs are serving the LPs. GPs want to serve the LPs, but GPs have like 100 other things: buying the deal, underwriting the deal, lender, broker, vendor, right? Like water bills, whatever, and probably management company. So what we can do as one of the vendors is how can we make the life easier for that GP? Because so that creates this, that gives me the hope that like, if we just do this part, we will serve the overall mission, which is make LPs' lives easier. Once their lives are easier and they see the returns, they should come back. And that's when you build trust. So, yeah.
No, I think that's a great flow. I think it's logical. I would probably take a counterpoint on your first assumption.
Sure.
I think the GPs are there to serve themselves.
Okay.
And, they're in it for themselves. And that's a very cynical starting point. But I think it's accurate. And if you do, the LP, the guy who's from Microsoft, if he understands and acknowledges that, yet he still feels like he'll make money with the GP looking out for himself, that's a key difference between the stock market, which call it an efficient market, where there is a very high degree of trust from any retail investor that, man, the execs at Disney, at ABC, they're all corrupt. They're all just trying to make a buck for themselves. But if they do a good job for themselves,
I see what you're saying.
I make money as a byproduct of them in their own best interest. And they have a high degree of trust due to, I think, to your point, the reporting, the threat of criminal SEC, and the audited financials. So there's a high degree of trust that you're not going to defraud me of a publicly traded company. But in the real estate, raising money a lot of times comes down to a face-to-face with the GP. And every LP investor, I think they at least implicitly say this, is, I trust him. I trust Perry.
That's right. Yeah.
And that's a bottleneck on how much capital you can raise, because how many Zoom calls can you do in a day? You physically can't meet thousands of people. So you're limited to raising 170 people on a per deal basis. Yes, they could write bigger checks, and that's what helps. And you have some repeat investors that don't need to meet you again. But that's a bottleneck for all these syndicators, which is, who is this person? Because they have to have that trust. So it sounds like to me, I think you're still solving the problem, which is if you create standardized documents, or if you have some past history of deals on the platform, that Microsoft guy who's just online at 1 a.m. wasting time, and he hates his job, he'll put 50K in when he sees this data from you, who Perry's self-interest is to create a reliable marketplace, right? Your interest is in just weeding out the good and the bad accurately. And then the GP's interest is in making money, but they're handcuffed by the platform's requirements. So he believes that, okay, the GP wants to make as much money for himself, but I will make money too within these rules of the game. That, and that's the problem with real estate. And I think, we talk about it. There's all this fraud out there, right? A lot of, there's Apple's Way. We've got Nightingale scams. That's in office. But a lot of these multifamily guys, they're just straight up defraud. Like they either didn't buy the property. They said they bought rate caps when they didn't buy rate caps. There's real issues, and these people are going to feel burned. They're going to be gun shy. But the reality is they don't have a lot of choices. You have some investable funds. You can put it into the market, which you maybe already have a lot of overexposure in your retirement accounts. You can put it into these LP alternative asset funds. You could do fixed income, I guess. So you could be buying bonds, but those returns are just, for young people, fixed income products are crap. You could do day trading, swing trading, Forex. I know some people like that, but really there's not a lot of options, right? So we're back to real estate, which people know inherently there's a lot of money to be made. How do you choose the right horse to bet on?
Yep, I like that. Yeah, that's it's good correction. It's more of a philosophical way of saying, ultimately everyone is self-interested, to some degree. Does the founder of a large public company really customer obsessed, or that's the best way to make money, right? But again, I do think that there is intrinsic kindness of they could do it another way, but if you do put the LPs first, that is the best way to.
That's fair. Look, I mean, I was a philosophy major in college, so I did 3 full years of philosophy only, and then my parents were like, "Hey, that's great, you did philosophy, but what are you gonna do with that?" And I didn't have a good answer. So
that's one of the top majors to go into law, math and philosophy, right?
It is. But I added econ in my last year and took 3 econ classes a semester. It was horrible. But I got through, and at least I had an econ degree, which but yeah, I mean, I think you talk about AI and widening wealth inequality, and what's going to happen is there's going to be more of a focus on the human element and really kind of analyzing people, and the jobs that are going to be created are vetting other people or marketplaces to connect people. Because let's say AI just handles a lot of the details. It handles the underwriting, and you can put the underwriting into your own AI analysis.
That's right.
Feel comfortable, and they do their own AI, and the AIs talk, and you're like, okay, yeah, it's good. Just because the numbers are all copacetic, do you trust that person? And it goes to that fundamental thing of, if the GP convinces the LP that I will take your best interest in mind because it's in my best interest, you probably have a deal. They have the capital. I think you have a deal. So all of the noise is going to move down in terms of the priorities. And it's really going to be much more focused on that human to human connection of, do I like this person? Do I trust that he knows what he's doing and he's not going to screw me over?
I think that's very well said. And this year is a very interesting year because we just sold that property that has 38% total return over the course of 2 years. And on that email, I said I will stop becoming a GP on real estate. All my deals are actually doing well, no capital call, but cash flow portal is way too much work, so I'm gonna focus on cash flow portal. But if you want me to refer you anyone, here are a couple of links on Palace that you can connect with these two. And so what happens is that $1.5 million were invested. And they talked to me. They told me, do you really recommend it? Like, are you sure? They call me. Like, yes, I do recommend them. I work with them. I invest with them too myself. And so, and one very good conversation someone said to me, and he was like a staff engineer at Meta. He's like, Perry, if I just meet you today, I will not invest with you. I'm sorry, but I will not invest with you. But I know you so long that whatever you say, I've got to invest in whoever you tell me. So yeah, like $1.5 million, basically 0% commission, made 0 out of it. But it's helpful. It's like And today is December. Now it's December. They need to invest that to take advantage of the depreciation, right? So now it's like pretty hectic for everyone. And so yeah, one recommendation, they have one phone call, and then a couple of days later they invest 100K. I was like, dang, I did not know that's the power of referral. And I text the same person back, like, hey, just so you know, this is my personal recommendation. Just if in case something happens, it's not my fault.
That's right. Do your own due diligence. You add PS, do your own due diligence. I don't know their deals.
Yeah.
But no, I think it's a really interesting shift. And the most important thing that, you speak to me is, what you want to do and you choose that life. I think so many people are caught in wanting something more, and they don't like their job, and they're making good money, and they just feel like they need to save, either frugally or this FIRE. Are you familiar, like FIRE?
Yep.
Financial independence, retire early, work optional type of stuff. And there's all sorts of spinoffs. I love the spinoffs, like Coast FIRE, Barista FIRE, Fat FIRE is my personal favorite, Lean FIRE. And so there's all these different permutations, but it's just this essential concept of do something you don't like for a bearable amount of years. We're not even talking a short amount of time. Do it for a number of years so that you get your big pile of money, and then suddenly you can start living your life. And I really just don't think that's a great way to go. Life is too short. It's not promised. I mean, tomorrow is not guaranteed. And so, I appreciate you, Perry, spending time with me today. It may be the last podcast interview you do, or it might be my last one, but I'm happy to share it with you. And these people that just kind of feel stuck for whatever reason, their family, their spouse, their kids, I get it. But it's a real shame that more people aren't able to do really exactly what you want. Because I really don't think it's about the money. We live in the U.S., wealthiest country in the world. Everybody listening to this has disposable income. You can make enough money to fulfill your basic needs. You don't need to work a bad job to do that. I say, all my listeners are super intelligent, very smart, hardworking people. So you don't need to do that. Yet 90% of them will complain about it. And so for you to put something very profitable, very successful, and say, I could do this, but I choose not to, that really speaks to me too. Because
thank you for seeing that. Yeah. I mean, when I quit my job, I basically took a 90% pay cut.
And look, everybody has their own personal decisions. I think for me, I'm married. I've got 2 kids. The decisions that I make now will be different. And, for me, I invest really heavily in direct industrial real estate, but I have the law firm, and I love making these videos and spending hours and hours editing and doing this and research and all this stuff and filming, but it's something I enjoy. And so for me, my time is do the law firm, do the YouTube, do these videos, and invest in industrial real estate. We've got some deals under contract, but it's all partners equity, right? And so I don't submit myself to the arena that is the LP arena.
Right. That's right. Yeah.
Which for me, yes, could I probably buy 10 deals next year and raise LP capital? Yes, I'm really confident. I have the DMs all the time that people they're like, Ron, I've been watching you for years, and you know what you're talking about. You're an attorney, all this, you've seen all this. But I don't want them as partners, right? They become my best interest to adopt your mantra, right? Your terms of service, you should have that in the first sentences. By agreeing to use Cashflow Portal, you agree to put your LPs ahead of your own interests.
That's my personal belief. That's my personal belief.
So that's from the company. And anything Perry says is not indicative of Cashflow Portal. When you go public years down the road, you'll say, oh, that wasn't Cashflow Portal. That was just Perry personally.
My personal belief is, they're like, how could you put the LPs first when your customers are GPs? And what has to make sense is that by making tools to help GPs become more efficient, that is the best gift that we can give to LPs right now.
Absolutely. I think consistency of product, consistency of information across different areas, and then just aligning expectations, because the LPs get on the platform and they expect something from the GP, and the GP expects to upload a document or to give a certain update. And that's the really greatest gift, because I deal a lot with unhappy LPs and 10x this year. But the thing that they tell me, that maybe the number one question, they're like, Ron, does the GP have a legal duty to give me updates? Because they just asked for a cash call. I sent the money in, and then crickets. They don't hear anything. And I kind of have to go into the docs and figure out state law and some of this statutory thing. I'm like, well, they have to give you once a year updates. And they're like, so they don't have to give me any update after I give them a cash call. And I say, legally, they don't have that obligation. And that's very different from a social or moral expectation, because it's a gray area. I don't think that it necessarily was clear that there would be quarterly updates or monthly updates of varying degrees, because the portal makes it easier, right? You just click a few buttons and shoot out certain things that are acceptable for the GP to update. Because otherwise, as you know, everything a GP does is like lifting the boulder by yourself every single time. So I want to send an update about the paint color that we painted the weight room. It takes the same amount of work as if I send out like K1s at the end of the year, almost. But you know what I'm saying? Like the amount of work, the effort, these GPs, most of them have other jobs or they have other investments. Sending out updates is not easy.
Oh, by the way, one of the features was we allowed them to send monthly updates using AI. And the way we do it is you can put KPIs like occupancy rate, total rent, other income, etc., as the metrics. And then you ask them, hey, why don't you write a paragraph about the financials for last month? And we taking those KPIs, which is particular to the property, and we even use AI to add color to it. Like we know what's good, what's not good, and so on. So that was, again, that's the whole thing is consistent, which is like, why do we do that? We do that because I have been a GP. I understand that's the pain point. I understand investor updates are one of the hardest, not hardest thing, one of the most cumbersome things to write. I want to take between December 25th and December 31st off so I can enjoy Christmas. But guess what? We made a rule to always write an email before the month ends. So we're going to wake up on December 30th or 31st, write that email. Is there a tool that can help me make my life easier that day?
Yeah. I mean, ChatGPT is amazing. I mean, I pay for like the upgraded GPT-4 version, and it's just so powerful, even for lawyers. I mean, don't tell my clients, but we use it as a prompt, because sometimes the hardest thing of writing, and we write all the time, is how do you get started? And when I give a task to one of my staff, I say, just type my instructions literally into ChatGPT and see what it says. They're going to make edits. They're going to touch every single sentence. But the point is, it gets the words and the structure, and it's a good grammatical start or answer to my prompt. But yeah, it's really pretty powerful. I tell all my clients, anybody watching this, if you want a discount on legal services and you want me to like do Chat GPT for all the initial drafts, and I'll just review it, we'll do an experiment and see if it like saves you money.
I see what you're saying.
I mean, that's what people say. That's like the legal scuttle is the rumors is no lawyers are going to draft anything anymore. You're just going to put it into GPT and spit out a document, and then we edit. But our job is never going to be to like populate first drafts anymore. AI theoretically could do that. I think it still has a ways to go, because people think our forms are very templatized, but there's actually a lot of nuance on every single deal, and you're going to spend more time telling the AI which category it is than if you just would have done it the way we do it. So not the best answer, but at scale, I think eventually, AI should be that first draft of everything. So.
Yeah, that's a really good saying. It's way easier to make incremental improvements than to start from 0 to 1. And that's a human nature. And the job of any good product is to lean as much on human nature. So,
yeah, and make customization. You know, that's I think in the future, lawyers and any service provider, our job is to provide customization. There's, you know, tons of free PSAs and leases you can find on the internet, thousands. But almost the sheer variety makes it harder for you as a consumer because you don't know which one is good. All I offer is customizations, custom for your property and custom for your goals as an investor and custom for the tenant. That's it. The boilerplate is all the same, but we're selling customization. So, well, thanks so much for joining, Perry. I mean, it was a great conversation. I know we did not script very many of those questions at all, but you know, you're an interesting guy, and I think your life experience is really a good lesson for people that want to get into syndication, or they're starting as a GP and they're deciding, how do I make sense of this? Because there's only these gurus that are very self-interested in teaching other people how to be their GPs. There is no guidance on, you know, I think you're agnostic on, you know, who sponsors come in to use your platform. You could be the guidebook for everybody, and I'll be the lawyer, and then you be the cash flow portal.
Yeah, absolutely. That's right. Yeah, it's very interesting on how we come a full circle. You know, initially the 9 to 5 W2 employee, then became, you know, like landlord, house hacking. Then I actually did 12 LP investments myself. And so I did like 5-6 of them before I did my first GP deal. And most of them are good. Some of them, you know, they are doing capital costs as well. Those are my LP deals. And then I became a GP. Then I became the software person. And then kind of goes full cycle. You know, at this point, if you're asking me, do I want to buy another single family and do the Airbnb, you know, thing? I'm like, no. I also don't want to be a GP. And so it's very interesting. You go this full cycle. Eventually, it's like, I think this is my calling. I'm good at what I do in this one, or at least I think I'm good. And this real estate thing, GP, I think I can be decent at it, but it's not like I feel like my skill set shine the most. There are way more GPs that are probably more passionate about it than I am, even though I am passionate about it. There are also a lot more GPs that when I talk to them, I highly, highly respect them because they're very gung-holding. They care about things like WALT, W-A-L-T, right? Like that's a very technical term on like how much leases are expiring.
Yeah, weighted average lease term for anybody.
Right. I'm just like, I don't care, man. I just want to build a good product. And so at some point, I find out what I want. Yeah. So
awesome. Well, I'll drop your links down below. If anybody's interested in reaching out to Perry, definitely check out Cashflow Portal. If you're still watching, smash the like button. We'd appreciate it. And we'll see you next time.
Thanks.